Many of the top cryptocurrency mining locations either have cheap energy or a cold climate. The combination makes the activity profitable. Russia's power company Rosseti is pursuing a Bitcoin mining business. It aims to collaborate with mining companies at low-utilization power supply centers. The initiative will improve the utilization of idle capacity and increase grid load and tariff revenue, supporting local economic development and tax collection. Low electricity rates. In a nation where electricity rates are among the highest in the world, mining cryptocurrency offers an attractive revenue stream. Bitcoin miners can reap significant profits from a single transaction, and demand for mining equipment is surging. This surge is driving investment in mining farms around the globe, including Russia. In fact, the largest grid company in the country, Rosseti, is leveraging its underutilized power centers to facilitate crypto mining operations. The company will act as an operator coordinating the placement of mining infrastructure, focusing on regions with low electricity demand. Rosseti believes that this move will improve the utilization of its idle capacity, increase grid load, and boost tariff revenues. This will, in turn, foster economic development and tax payments. Moreover, the company's venture into crypto mining is expected to support regional energy grid stability. Rosseti has already established infrastructure geared towards managing mining operations while ensuring steady electricity service, and it will also utilize its data storage capabilities to ensure power supply reliability. Another benefit of Rosseti's foray into crypto mining is its potential to bolster the Russian economy. By converting dormant power centers into Bitcoin mining facilities, the firm is likely to generate additional economic activity, which will boost local employment and taxes. Meanwhile, Rosseti's foray may serve as a blueprint for other traditional energy providers looking to thrive in a rapidly evolving digital environment. It's worth noting that the regulatory landscape for cryptocurrency companies varies significantly between Russia, Europe, and the UAE. While the latter three are imposing strict regulations to oversee crypto companies, Russia is taking a more cautious approach that prioritizes geopolitical concerns. In the future, Rosseti plans to introduce a system that will allow consumers to pay their electricity bills using cryptocurrencies. The system, developed by blockchain startup Waves Enterprise, will use data from household electricity meters to distribute payments between the company generating the power and the power grid operator. This will make the calculation of bills more transparent and reduce what households owe for electricity, which currently stands at over $12.5 billion in Russia. Cold climate. With the exception of the United States, Bitcoin mining is most profitable in countries with cheap electricity rates or a cold climate. The latter reduces cooling costs and allows miners to operate equipment without consuming excessive energy. In Russia, both of these factors make it especially attractive for miners to set up operations. However, local electricity providers routinely raid cryptocurrency mining farms whose operations are easy to spot by their massive electricity consumption. These raids have pushed miners to relocate their operations from cities to remote rural areas. Among the best-known mining centers are located in Transnistria, which has substantial power capacity at the MGRES power station and access to free natural gas through Gazprom. It also has a tech park that aims to attract miners by offering electricity at $0.043 per kilowatt-hour. In addition, the region is under Russian protection, which provides additional security and makes it less likely to be targeted by raiders from the west. In other words, the shadow territories of Transnistria, Donbas and Abkhazia provide a particularly lucrative environment for Bitcoin mining. These regions are not recognized by the international community, and they lack sovereign governments and a legal framework for property rights. The gray zones have also been able to avoid the economic sanctions that would otherwise apply to them, providing a significant competitive advantage for actors aligned with the Kremlin. These conditions have helped to make the country the second largest cryptocurrency mining hub after the United States. However, uncertainty around American regulation and rising competition may force the country to rethink its position in the global market. As a result, Rosseti is attempting to lure miners away from the United States with a novel offer. According to a report by the news agency TASS, Russia's largest energy supplier plans to launch cryptocurrency mining operations and allow specific power supply centers to collaborate with mining companies. The company will focus on low-utilization power supply centers, a move that could increase mining activity and tariff revenues. A Rosseti statement on the matter noted that illegal block reward mining using stolen electricity is a serious problem in Russia, resulting in loss of income for local power producers. In order to combat this, the company is investigating a number of tools that can be used to incentivize low-load power centers to participate in mining. These include adopting special electricity pricing policies and leveraging the grid's load management capabilities to ensure reliable regional power supply. Low taxes. The Russian government imposes taxes on the profit of businesses, individuals, and property. These include a value-added tax on certain goods and services, a mineral resources recovery tax, excise duties on certain types of alcohol, beer, cigarettes, and cars, and a profit tax on dividends. These taxes are in addition to a corporate income tax. The rate of corporate tax is 20%. Capital gains are subject to a flat rate of profit tax, and current trading losses may be offset against profits for the same tax year. Rosseti's venture into crypto mining reflects a shift in the Russian energy sector's approach toward this resource-intensive industry. Previously, Russia's authorities have been critical of Bitcoin mining because of its high electricity consumption and environmental impact. By incorporating mining into its energy operations, Rosseti hopes to optimize its use of the grid's electricity resources and increase tariff revenues. It also aims to promote economic development by facilitating the growth of mining facilities in underutilized regions of Russia. In addition to low electricity rates, Rosseti is offering attractive tax benefits for miners. It is a public joint stock company that operates the Kuban electric grid system, which transfers and distributes electricity across the Krasnodar region and Republic of Adygea through 110 kV networks and lower. Its infrastructure is geared towards managing mining facility loads, and it maintains operational data on available capacity to ensure consistent and reliable regional power supply. It is also mulling the introduction of a separate tariff structure for miners as a demand management tool. In addition to these incentives, mining and trading income is exempt from value-added tax, and profits from these activities are taxable at a rate of 15%. This tax advantage makes Russia an appealing destination for cryptocurrency investors looking to save on operating costs. The additional savings incurred will allow him to better compete against foreign rivals in the region and take advantage of the growth potential of the digital economy. This development could mark the beginning of a new era in Russian cryptocurrency mining. In the long run, it could even make Russia a global leader in this fast-growing sector. Legality. The country's government recently made Bitcoin mining legal, though some limits still prevent the local crypto industry from growing. The new law allows companies and individuals to mine cryptocurrencies as long as they register with the authorities. It also requires them to provide information about their energy consumption to the central bank, which can prohibit or restrict the use of cryptocurrency transactions if necessary to maintain financial stability. The law also recognizes digital currencies as property and enables them to be used for cross-border payments within Russia, but only if the miners are registered. It also prohibits the advertising of cryptocurrencies and limits their use for financial settlements to an unlimited number of people in order to protect against money laundering. In addition to the registration requirement, the law introduces new tax rules for Bitcoin mining. The miners will be taxed progressively based on their income, with a 13% rate on earnings up to 2.4 million rubles and a 15% rate above that threshold. The tax rates will increase in 2025, while the profit of large companies will be subject to a 25% rate. Russia's government believes that crypto mining has potential as an economic activity. It will promote infrastructure investments and contribute to overall economic growth, according to the country's finance ministry. However, the Kremlin remains wary of the risks associated with the technology. It has already banned the use of cryptocurrencies for regular payments internally and restricted cross-border payments to evade sanctions imposed after Russia invaded Ukraine. Putin is especially worried about Bitcoin mining operations in Russia's shadow territories, including Transnistria and Abkhazia. Such activities offer deniability and allow private sector players to plunder Russian state resources, like energy and gas, with impunity. As a result, the Kremlin wants to control the flow of foreign digital financial assets into Russia and limit the impact of their circulation on national security. The new law on Bitcoin mining will make it possible for foreign cryptocurrency exchanges to operate in Russia, but the central bank can ban them if they threaten the country's financial stability. The Bank of Russia will have the power to conduct a risk assessment of each project and decide on the appropriate registration requirements.